What overlooked tax deductions can save you thousands? Imagine turning hidden expenses into big savings on your taxes. Many people miss out on deductions that could cut their tax bill significantly. If you are an Asian American taxpayer, living in high-tax states or managing unique financial situations, knowing these deductions can make a real difference. Let's explore some often overlooked deductions that could save you thousands of dollars. First, if you earn cash tips from jobs like restaurant service or hospitality, you might be surprised to learn you can deduct qualified tips. For the year 2025, if your income is $160,000 or less, you can deduct cash tips received, up to $25,000. This applies whether you itemize deductions or take the standard deduction. The deduction begins to phase out for single filers earning over $150,000 or joint filers over $300,000. This new rule is in effect through 2028 and is especially helpful for service workers. Next, if you work overtime regularly, you can now deduct overtime pay from 2025 to 2028. This applies to both people who itemize and those who do not. If you often work extra hours, this deduction can lower your taxable income and save you money. Another often missed deduction is for interest paid on car loans. For the years 2025 through 2028, you can deduct interest up to $10,000 on your car loan. This is available whether you itemize or not. The catch is, the deduction phases out for single filers earning over $100,000 and joint filers over $200,000. If you're financing a new or used vehicle, keep track of your interest payments to claim this deduction. If you have student loans, the student loan interest deduction can be a big help. You can deduct up to $15,000 of interest paid on student loans. To qualify, your modified adjusted gross income must be less than $85,000 for single filers or $170,000 for joint filers. The deduction phases out at $100,000 for singles and $200,000 for couples. Many Asian American families with student debt can benefit from this, especially if they meet the income limits. For those working abroad, the foreign earned income exclusion can exclude up to $130,000 of foreign income from taxable income in 2025. This is especially relevant for Asian Americans working internationally or earning foreign income. Seniors aged 65 or older can claim a $6,000 exemption to reduce taxable income. This exemption is available regardless of whether you itemize deductions. It begins to phase out at higher income levels but can be a helpful way for older Asian American taxpayers to lower their tax bills. Parents working and paying for childcare should look into employer-provided childcare credits. The credit has expanded from 25% to 40% of eligible costs, and small businesses can now claim up to 50%. If you pay for childcare, this credit can significantly reduce your tax liability. Finally, if you live in states like California, New York, or New Jersey, you need to pay attention to the state and local tax deduction limits. While the federal cap is set at $10,000, planning ahead and understanding your state's rules can help you avoid surprises come tax time. To make the most of these deductions, review your income sources carefully. Track your tips, overtime hours, and interest payments. If you have student loans or foreign income, check your income thresholds to maximize deductions. For older adults, ensure you claim the senior exemption. And for working parents, explore employer child care benefits. Consulting a tax professional familiar with state and federal rules can help you optimize your tax savings. By understanding and applying these often overlooked deductions, you could save thousands of dollars each year. This not only eases your current financial burden but also supports your long-term financial stability.